Hi guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so let's grab the bias chart here and let's get started with our analysis. Okay, so hold on really quick. I'm sorry. 1 second, please. Just let me make one more adjustment. Hold on. Hi traders, this is Blake Morrow. You were listening to the Morning Edge. Sorry about that. I had to make a quick adjustment really fast. All right, so let's go over to the euro dollar really quick and let's get through these charts. So here's the euro, and now remember the dollar index hit 100 today, and so that means that the dollar index or the euro is probably due for a bounce. Now I'm not long the euro. I probably should be. I probably should be here, but I'm not. I wasn't around when we were trading down here at the 127% extension. But take a look at what we've done. All right, so here's the euro, and let me get rid of this fib. We don't want that one. No, we do want that one. We don't want this one, because you can see that post-election, the euro rallied up towards the 618 retracement and then reversed. All right. We just hit the 127% extension overnight. Now, if I was around to see that, I probably would have bought that. Now, I probably will if we get down there again. So I'm going to put down 1.0730. Now, if you think that I think the dollar is going to hell in a handbasket from here, that's not what I think. I actually think that the dollar is going to pull back, but I think the dollar is going to eventually break out. So what does that mean? Well, what that means to me is that the euro dollar may bounce, but the bounce is probably going to be limited to this previous support here. So if you're playing the euro to the long side as a counter trend trade, I just wouldn't expect a whole lot out of it. So if we can, and this is a daily, let's go over to the 4 hour here. So if the euro can get back to, what is that? I don't know what I drew here, but I'm going to get rid of it from last week. It looks like I was hoping for a reversal up there. 108.50 is going to be resistance on any rally now. So 108.50, if we can rally back to 108.50. All right, and it is bearish. So this is a bearish bias. We're back in our bearish bias again. And if you're trading on the long side, that's fine. Just remember your counter trend. So don't be too aggressive. I don't think it makes a whole lot of sense to be too aggressive at this point. All right. Let's go over to the cable. Now the pound, the pound made a really nice squeeze last week, and you can see we squeezed right up to the, let me grab this right here. Okay, this fib, you see that? So we rallied basically to 161% extension and came back down again. Now, I don't have any cable exposure. I do not. Okay, just double checking that, making sure that I don't have any cable exposure, but you can see really strong support here on the pound. So the pound should be supported on any dip back down to 124.40. Okay, let's double check that. We're at the 618 right now, or we respected the 618, but I'm gonna give it down to 124. Probably by the time we get there, 124.50. Okay. I'm taking a look at something really quick on my screen. This dollar yen's still pretty well bid. Okay. Anyway, what was I saying? Okay, 124.50 should be support. Okay, now any rally, well, I think any rally to this 126.75 is going to be a sell, but I don't, the question is, are we going to even be able to get all the way back up there? It's kind of like if the euro rallies to 108.50, which is possible, maybe the cable will rally back up to this 126.75. Now, remember, that is 100, even though I took the fib off, that's 161% extension. So it should hold. I would think, it's still, if you take this extension here, still the 161% extension now. So any move back up to 126.75 should, find some sellers. Okay. We are in a range environment with the cable. We are. Man, this dollar yen all up in my grill right now. Okay. Dollar Swiss. Okay, so here's the dollar Swiss, and the dollar Swiss, God, that damn thing. I can't believe I missed this damn thing. So upset that I'm not long, and I was long. I actually was long some on Friday, and then I took it off the table because I was thinking, well, I can go. I think I'm going to be able to buy it cheaper. Obviously, I was wrong. Very, very messy chart here. Parity is obviously going to be key resistance. I'm not, I'm not a big fan of shorting the dollar Swiss. I'm not at all. But parity is going to be resistance now. Big resistance. All right. Now, if given the opportunity, question is where can we buy this thing? And I can't draw a fib from low to high right now because I don't know if we've peaked yet. If I knew that we peaked, or I was confident that we peaked, then it'd be a different story. That's just not the case right now. I think dips down to 9.99 are going to be pretty well supported here. Okay. We are range bound, but we are threatening to go bullish in this one. I don't think it's going to happen today. I'm just saying we're threatening to turn bullish on this. Okay. Because yeah, if we bust a move now, if we bust a move through these highs, that probably means that the dollar index is either at 100 or closing in on it. I just can't buy right now. I definitely don't want to short it though. For me, it's just you guys know it's like against my DNA to buy Swiss francs. Just can't do it. Not doable. All right, dollar yen. All right, so I shorted some dollar yen this morning at 107.85. So I'm out of the money a few pips. But if you don't know the reason why, this is the reason why. We have a high to low, spike high 161% extension. That comes in at, let's call it 108.20. All right. Resistance in the dollar yen, 108.20. I think that's going to be significant. You can trade against it today. All I know is if it breaks 108.20, I don't want to be short. Period, end of story. Okay. This has turned bullish, the dollar yen. Okay. It has turned bullish. We've gone from bearish to neutral to bullish. Now, the question is, what dip can we find to buy? Because even though I'm short it right now, I'd rather be long than short. Okay. It's kind of like the bond market. I think, going back to the long bond, and let me take you back over to the bond market really fast. Here's the 10-year, and this is the 10-year Treasury. I think the 10-year is broken. It's broken down. It's broken. It's now bearish. I don't necessarily want to be short down here. I don't trade bonds. I'm just saying, you know, if I was, I wouldn't want to be short down here. I just now want to sell rallies. Okay. The 30-year Treasury, you can see we actually hit the 2012 highs. We came down and stopped there today. Even though I think that we're going to eventually break down in the bond market, I think that we bounce here, at least for a day or two. Again, I may be totally off base, but bonds, I think, are going to continue to go down, which means yields are going up, which means the dollar is going to continue to rally. All right. But I think that the bond market at this point can bounce and give us, you know, the Jeffrey Gundlach tradable bounce. So if we get a tradable bounce here in the bond market, what does that mean for the dollar yen? Well, that means the dollar yen will have a tradable pullback, I think. Okay, and that's what I'm playing into. So now, where's the dollar yen going to pull back to? Well, this is obviously really big support. I just don't know if we're going to make it back down to 106. I would think today, you know, if we got to move back to 107, I'd be happy with that, being short. Okay, right there. Again, I don't think we're going to make it all the way back down to 107, or excuse me, 106. I just don't think that that's going to happen. But a move back to 107 is possible, at least based on what we're seeing right now. All right. Let's take a look at the dollar Canadian. I am short the dollar Canadian. I shorted the dollar Canadian at 135.74 this morning. But crude is still pretty weak, but I think crude's sitting on support. That's why I think if crude can bounce, the dollar Canadian will pull back here. Now, if you guys haven't seen this 50% retracement, so we basically hit 135.65. Well, I mean, we spiked above it. We went as high as 135.88. So I'm going to have to write that down as resistance today. 1.3588 is resistance. You know, do I think that the dollar Canadian can pull back from here? Yes, I can. Or yes, I do, especially if crude can bounce. You know, the question is how far are we going to be able to pull back, and that I'm not 100% sure about. Okay, because it's been so messy. I mean, the dollar Canadian has been a very messy trade. Period. End of story. This looks more doable right here. By the time we get down there, that'll be like 135. So maybe a move back down to 135 is possible. Okay, let me stop really quick about the dollar Canadian. One of the other things about the dollar Canadian is the dollar has been so strong. I mean, you look at the euro. The euro went from basically 112 to 107, right? That's a 500 pip move. Okay. The dollar Canadian really hasn't rallied. I mean, it's rallied, but it just really hasn't rallied a whole lot. So I think that yeah, we can pull back to 135, but we could actually pull back further than that if the dollar really starts to pull back. I do think it's bullish. So because I'm short the dollar Canadian, I know I'm trading counter trend right now. You guys don't catch me playing counter trend a lot, you know, but in this case I will. And the reason why I am is because of where the dollar's at. All right. Usually I just stand aside and say, okay, let's just let the dollar pull back, and then I'll just buy the dollar on a pullback. Right now I am trading counter trend because I know the dollar's up against some really critical resistance. Okay. Let's do the Kiwi really fast. Okay, so I closed out on my Kiwi short. Now, New Zealand got hit and they got rocked with a uh, earthquake over the weekend, and I'm like, okay, well, yeah, I know I've traded through 1,000 earthquakes, and tsunamis in the past, and basically, whenever there's an earthquake, it hits the currency initially, and then the currency bounces back because people go, well, think about all the destruction and infrastructure spending they're going to have to, this is going to be stimulus and yada yada yada, and then the currency will bounce back. So I figured the dollar Canadian or the Kiwi dollar was going to gap down, because we closed in the like 20s. I figured we were going to gap down, and I thought we'd actually bounce back. But when we gapped down, I closed out my my Kiwi short, and I closed it out like right here. I mean, I'm literally closed it out at 70.84, I think, and we're at 70.85. So I mean, I literally closed out the Kiwi right around where we're at right now. But what I'm surprised about, and the reason why I'm telling you this, is because I'm surprised the Kiwi hasn't bounced back more. But the flip side to that is the Kiwi's bearish. Okay, the Kiwi's bearish. It's a bearish currency. The other thing about the Kiwi is we look like we're going back down towards channel support. There's going to be a ton of support down here. All the way is mostly, in my opinion. Here, let me grab this one right here, right around 70. Okay, just below 70. This horizontal support. This is going to be a lot of support as we get down here. It's going to be massive channel support. Even though I am short the Kiwi because I'm long the Aussie New Zealand. I'm short some New Zealand Canadian from this morning. I'm basically short the Kiwi currently. I'm not short the Kiwi outright right now. All right. If the Kiwi cannot muster a rally soon, to me, that means that we're going to challenge. Here, let's grab. I can remove that. I can remove this. Let's grab this. If we can't muster a rally soon, we will get down here. I had a limit order. Oh, matter of fact, I need to make sure my order is canceled. It's not, so glad I thought about that. Okay, so if we can't muster a rally soon, we are going to challenge 70.25, basically. All right, which is down here. And I think it's doable. It's 127% extension of this move. All we're doing is we're consolidating below here. Okay. So in order for us to start squeezing in the Kiwi, we have to break back above 71.10. Okay. 71.10. Support is 0.7025, and that's going to be major support on the way down, and it has turned bearish. All right. All right, when I get back, we're going to do the Aussie dollar index, peso, Swedish krona, Norwegian krona, fun stuff. Don't go anywhere. Glad you're all here. Happy Monday. Be right back. Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up our analysis. We did the Kiwi. Let's go do the Aussie dollar. Okay. So the Aussie, we completed an AB equals CD. If you guys don't recall this from last week, so AB CD. I did close out my Aussie. I took it short over the weekend. I ended up closing it out. Oh shoot, I didn't want to do that. Let me grab that again. Okay. And come on. There we go. Okay. All right. So we completed an AB equals CD. Let's get rid of this fib here, and let's get rid of this here for now. All right. Now, like the Kiwi, the Aussie is trading pretty heavy. I closed my short yesterday afternoon. I took it short over the weekend. We are unable to get above 75.60. Now, I'm not saying that we won't, because obviously we can. Problem is if the market gets a little risk adverse. If the market gets a little risk adverse, we might actually continue lower. I am pretty convinced at this point that we had this false breakout above here, and then we're breaking down. Now, uh, I'm actually long the Aussie New Zealand, and I'm short the Aussie Canadian. So I've got, you know, I'm not like outright short the Aussie anymore. But that doesn't mean I shouldn't be, or that doesn't mean that it won't pay, because if we drop below 75, which is the 200-day moving average, the Aussie dollar is going to get absolutely clobbered. Okay, so I'm going to write down 75 for the Aussie dollar as major support, and if we break 75 in the Aussie, you just have to know it's toast. Like, you got to stick a fork in it. Like, there's no if and or buts about it. Like, if we break 75, I have to find a way to be short the Aussie if I'm not already. Okay, I'm short some Aussie Canadian, yeah, but I got to figure out how else to be short the Aussie. Okay, whether it's buying the Euro Aussie, Pound Aussie, short the Aussie dollar, whatever. I got to figure it out, because, in my opinion, this false break above here, if we break below 75, we're probably going to retest. We might even trade in the high 60s again. All right. And again, I'm not short the Aussie dollar at the moment. I'm not. I mean, I'm short the Aussie Canadian, but I'm not short outright the Aussie, which I feel like I should be. I'm just not. Okay. But I was a little careful, with the gap down over the weekend, or the move lower over the weekend, and I pulled some money out of it, and I'm just kind of sitting and waiting. Okay, now resistance. Resistance right now is going to be what was the spike high here from a 4-hour chart? That high was 75.60. And then maybe we might get a move back up to 76. So I'm going to write down both. And I know we're right there. So that's why 75.60 and then 76. Okay. And I believe we have turned bearish in the Aussie, because we broke back. As long as we're below this blue line here, it's bearish. I'm hoping that we rally towards 76, because I'm going to short the hell out of it. Honestly, I mean, just telling you. Okay. Where am I at? What are we doing? Dollar index. So here's your dollar index. We hit resistance, 100. It's 127% extension. After testing channel support post-election, we ripped. RSI is divergent. I mean, that's major resistance. Any which way you slice it, major resistance on the dollar index. 100, and it's major. All right. This is why I'm shorting some dollars right now, because frankly, I think as long as we hold that 100, there's a good chance that we come back to 99.20. Now, at 99.20, I might be a buyer. Depends on what's happening at the time. But the dollar index is bullish. Bullish. We're just right into, the upper end of our range. Even though it's bullish right now, it's hard to be a dollar buyer, obviously. That's why I'm shorting some dollars counter trend. I'm just saying that the dollar looks really bullish. And frankly, the dollar, as I told you guys on Friday when we were down here, I'm like, the dollar is going to eventually break out, and I want to be prepared for it. I want to have dollar longs going into, a breakout. I just don't think it's going to happen right at this moment. I think we're going to bounce around a little bit and then, push higher going into December as we get ready for, the next rate hike. Okay. Grab my coffee. Peso. So I shorted some peso on Friday. I got stopped out. Took a small loss. I shorted again. at 21 this morning. Okay. We hit, in my opinion, we hit channel resistance. And the reason why I really ultimately want to be short some US dollar Mexican peso right now, at least this is my thought process at the moment. I may be wrong here, but I don't think, like, the whole reason why the peso is up here is because, Donald Trump, the wall. I, I really don't think that the walls are going to get built, personally. And I think when the market realizes that, the peso is going to bounce. Now, I may be wrong. I mean, maybe we do end up building a wall. But I think some of the initiatives that Trump's talked about through the campaign, I just don't think it's going to happen. Now, as long as we stay, below 2130, I don't mind being on the short side. Now, what I'd rather do is be long down here at 19, sometime in the next couple of weeks. All right, so being short up here at 21, I don't really mind it, but you have to realize that, and just going back to this weekly chart, this is the longer term support. This is, if we're forming some sort of up channel, it's the resistance. Okay, we hit it on Friday. So 2135 is major resistance. 2135, it's major resistance. Now support, for the peso is pretty easy. It's right here. Well, actually, you know what? Looks like we're just continuing to grind higher. So this support will be at 2068. If 2068 breaks, we're probably going to start pulling back a little bit. 20.68, which I'm obviously hoping it's gonna happen. It is bullish. I know I'm trading counter trend right now, but it is bullish. Okay. Okay. US dollar, Norwegian krona. So the US dollar, Norwegian krona, we have this inverted head and shoulder pattern that's playing out. All right. Now the question is on this US dollar, Norwegian krona, is this trend line enough to stop us right now? Okay. Because if we continue to break out here above 850, this thing's just going to continue to rip higher. Okay, that's trend line resistance, so we'll put an asterisk there. Support, now dips down to 840, should be very well supported. And it's back to being, bullish on that breakout, but really need to get above 850. Swedish krona, $8.88. I know I keep saying that. Oh, look at this bad boy. It's crazy, huh? Look at this. $816.50. Actually, we should probably be pretty well supported right here. 901. 9.01. 916.50 is resistance, and it is bullish. Okay. All right. Your bias chart is finished. Finito. Wow, look at crude oil. Wow.